Hi traders, you're welcome back to the Forex Geek channel and you're welcome to this video. If you're looking to elevate your trading game, then you are in the right channel because the Forex Geek channel covers a lot of useful information about the financial markets. Okay, so you have a lot to learn from this channel. So if you've not yet subscribed, then you are missing out. So in this video, we are going to be looking at the Richard Dennis trading strategy, okay, a powerful method that has transformed the way many traders approach the financial markets. Now, Richard Dennis is known as one of the pioneers in trading, right? And he's famous for his unique approach that revolves around following market trends. A lot of traders actually stick with the ideology that following trends are the best, right? And there's even a saying that goes, the trend is your friend, right? So Richard Dennis's philosophy was simply revolutionary. He was like, anyone could learn to trade successfully with the right mindset and strategies. And today we are going to be unpacking the core principles of his trading strategy and how you can apply them to your own trading routine. All right, so you might want to stick around till the end of this video. So what exactly makes up the Richard Dennis trading strategy? At its core, this approach emphasizes trend following, which means looking for assets that are moving in a particular direction and capitalizing on that momentum. For example, now that the gold trading pair, XAU-USD to be specific, is trending upwards, this would be a good asset for this strategy. All right, because this strategy emphasizes trend following. So it requires you to stay aware of market conditions and be ready to adapt to changes. Now let's talk about the tools and techniques that are essential for identifying these trends. Some key indicators include moving averages. Moving averages are very, very popular indicators. In fact, they're one of the most popular indicators in the Forex market, and they are effective as well. Okay, another indicator that can be beneficial for the Richard Dennis trading strategy is the average through range. Average through range indicator, ATR. Okay, so I'm just going to be adding the ATR indicator to the chart right away. All right, so this is another indicator that can be proper useful because it helps to gauge market volatility. All right, so understanding these indicators will help you make informed decisions about when to enter and exit trades. Now, we can't overlook the importance of risk management. Richard Dennis emphasized that protecting your capital is just as critical as making profits. In my opinion, I feel like if you can't learn how to protect your capital, then you might not be profitable in the long run, because actually preserving your capital is even more important than making profit, because if your mindset is totally bent on just making profits without even having in mind on how to preserve your capital, then you might be taking uncalculated risk, which might eventually lead to you losing your entire capital. And at the end of the day, you don't make any profit because you lost your capital. So in as much as you are trying to make profits, bear in mind that preserving your capital is as important as making those profits. So you should give priority to preserving your capital. Okay, that's the reason why you must employ good risk management. Okay, this means setting stop loss orders to minimize losses and ensuring that you only risk a small percentage of your trading capital on any single trade, perhaps between 1 to 3% per trade. All right. Moreover, the psychological aspect of trading is crucial. So having the right mindset can often make the difference between a successful trade and a costly mistake, right? Cultivating patience, discipline, and emotional control will help you stick to your trading plan, especially during volatile market conditions. Okay, now let's talk about how you can apply the Richard Dennis strategy in the real world. You have to start by analyzing current market trends. For example, as we can see on this chart, this is a bullish trend. So you have to analyze the current market trend and using the tools that we mentioned, like the moving average and the average true range. Okay, and then remember, it's all about being patient and waiting for the right moment to act. Also, don't forget to keep a trading journal, all right? Documenting your trades, the rationale behind each decision, and your emotional responses can provide invaluable insights that improve your future performance, okay? So if you found this video helpful, please give it a thumbs up and don't forget to subscribe to our channel for more expert insights into trading strategies. We are here to support your trading journey every step of the way. Okay, so thanks for watching and I wish you best of luck in your trading journey. See you in the next video.